And we are live. Hello. Good afternoon, everybody. Welcome to another week of our weekly webinar series by PDAX. No? So for those new to the channel or the webinar, no, my name is Kyle. I'm from PDAX, and every week, no, nag-host kami ng mga webinars that feature prominent figures in the crypto industry that we talk to and invite over to give talks about crypto, blockchain, or anything actually, even before. So last week we had a talk. We had the live charting session with Toma Trader from Investograms. If you guys haven't watched that but want to watch that, you can see it in our list of videos. No, what we did there was we went through all the charts of crypto that you guys requested, and from there we were able to like chart through technical analysis and use our lessons also from the previous previous webinar that we had also that featured Sir Yuri or Ken Nalugon from Z-Freaks that talked about how to build your cryptocurrency trading strategy. No? So if you want to watch all of that, you can go check out our list for that. No? So for this week's webinar naman, we have a very special guest. As you saw by the title of our webinar this week is why crypto assets are the future. Okay, so understanding its value and potential. We learned about how to trade Bitcoin and how to trade all these cryptocurrencies, and we also got to learn about how how to use the platform now. But I invite everyone to also learn more about why why is crypto even becoming a thing these days, and why in the future what can we expect to see from the future of crypto now. So for this week's webinar, we've invited the CEO and founder of TagCash. His name is Mark Vernon. I'm going to invite him now. Hi, Mark.
Hi, how you doing?
Hey, first and foremost, thanks again for coming over and to the webinar and spending your time with us. Right. For those who might not know what TagCash is and who you are, could you give us a brief background, Mark?
It's been a few things over the years because we started about 6 years ago. I've always been interested in cryptocurrencies since 2012 when I first got into Bitcoin. But we got into e-money. So basically TagCash now is like Gcash Paymaya with a lot more programmable features in the back end. And slowly we're adding more features we've always had the ability to create currencies for rewards, for closed loop currencies and so on. But now we're putting in non-custodial wallets, which means that you can run your own Bitcoin, your own Ethereum tokens, your own Stellar tokens, and then maybe more blockchain-based tokens in the future. But the idea is that if you're using money, that you might also want to use crypto. So essentially, it's a digital wallet. And then we have another company called TagBond, which is the creation of tokens on Ethereum. So I'll go through that later. But essentially, it's a digital wallet for fintech. And that covers a lot of things, not just money, but tokenized assets.
Definitely. And super excited to hear what you're going to be presenting to us. So for those who don't know also, Mark's been in this space for quite a while, even before the boom. Am I right, Mark? Like, when did you first get exposed to Bitcoin?
Oh, you mean in the IT business? 1988.
1988.
That is years. So pre-internet, then internet. I had my first startup in Silicon Valley. Did 5 years in Silicon Valley. Retired 3 times. Come to the Philippines and start another business. But yeah, crypto 2012. Created my first cryptocurrency 2013. Just been playing around, but I'm more interested in what you can do with blockchain rather than just making money out of cryptocurrency. I'm more interested in the functionality of blockchains. What you can actually, how it can change the world.
Right. Okay. And we're super excited. Just for before we get on with your presentation, Mark, I'll just remind the viewers here who've just tuned in. Hello again. Welcome to our weekly webinar series where we talk about crypto. For this week, we have Mark Vernon talking about why crypto assets are the future and we understanding its value and potential. If you guys have any questions for Mark, we'll be entertaining them in the comments. So just send your questions over, and then we'll
but try and do it in English, because I can't speak Tagalog that well.
try it in English. If in Tagalog, I'll try to translate it for Mark. So no worries on that. Yeah. Okay, so if that's all, Mark, I think we can start with your presentation.
Okay, a little bit of a background, just to get into it for those if you're not used to what blockchains are. Before the internet, and probably you're not old enough to remember, but before the internet, you had to send physical forms of data. You send a copy or the actual original of letters and so on. So I remember explaining what email was to people. And so when the internet came along, this allowed you to share data via email, via sharing folders and so on. And this allowed you to send a copy of the data, but that didn't really make much sense in terms of value, because if you send a $5 copy, it's not really valuable. So in 2010, the technology came about that allowed you to do that, and that was the Bitcoin blockchain. This is the first time that digital value could actually be transferred from one person to another and proven to be so, and with no middleman. So if you imagine a couple of 100 years ago, banking first got started when someone had a whole pile of gold, and they said, how do I send it to someone? I'll give it to a goldsmith, and they'll give me a note that I can give to them. It's a bit lighter to send, and you can send it around. And that's the introduction of money, digital money. But real money in note form. So anytime you had that note, you can go back to a goldsmith and say, can I swap it for the gold? And that continued until 70 years ago, and then they just disconnected money from gold, and then that was the introduction of fiat. Fiat is what you say it's worth, what the government says it's worth. But and that's continued until 2010, and now suddenly you could transfer value without needing a middleman. You don't need a bank in between. You don't need anyone between. So that was the first time that was enabled, and now you could start doing more interesting things with it. So just explain quickly what a blockchain is. Basically, it's a database where if you write to it, you can't change it. And there's consensus involved, like there's a team of people that say, okay, this data is okay to go in there. But once it's in there, you can't change it. So the fact that you've sent some value from A, or you've written a message from A to B, that will be there forever, which means you can say, I've sent some value, in this case, Bitcoin, from one place to another, and you can't argue about it. It's there. So I don't want to get into too much detail on that. I'll give you nosebleed. But since the first blockchain was created, Bitcoin, there have been many others cloned from the open source of Bitcoin, or created from scratch with the same ideas. So here's some examples. We got Bitcoin and clones, where you just take, and I've done the same. I've cloned Novacoin, which is a clone of Peercoin, which is a clone of Bitcoin. And that was TagCash. I did that in 2013. That was my first experiment. Now, they work the same way. They work from usually from a system of proof of work or proof of stake. And proof of work just means that you've the way that Bitcoin works is a team of people using their computers, or computers compete for the right to be able to put the transactions that have been going on over the last 10 minutes in Bitcoin's case into the last block on the chain, hence the word blockchain. So they want to compete to put the data into the database. And proof of stake is slightly different in that you prove that you've got some in there, and you earn some money for being able to validate the transactions that are going into the blockchain. You can get really into depth in that, and again, it's too much for this show. But that's one type of blockchain. Ethereum was one that's created 2015 or 14, 15. And this is slightly different in that you can write data that can't be changed again, but they're in the form of smart contracts. So for example, I can say, we're going to bet about who wins a basketball game. And we put up a contract to say, if I win, I get this. If you win, you get it. And once it's written, it happens, and nothing can stop it. So no lawyers in the way to argue it. It's just that's the way that a smart contract works. You put something up there, and then it operates according to that. What's that?
It can't be changed already after you set.
So, so the biggest use of Ethereum smart contracts to begin with were the creation of tokens, and that's where a lot of the ICOs, a lot of tokens are created on Ethereum, and they have rules. Usually, like an ERC20 token is a standard set of rules to say you can transfer, you can do this, and so on. So that's and I have a separate site called TagBond. I'll show you later where you can create different types of tokens. Stellar is something I find really interesting. It's basically an open network for storing and moving money. Now, you probably all know about remittances coming in from abroad, and this is what's already being used, but we want to use more and more Stellar. There was one before that called Ripple. You might have heard of that in the banking system, but the guy who started Ripple, he left and then created Stellar, which is a fairer system. It's a foundation, non-profit. So anyone can create tokens on Stellar. It's very easy and very cheap to transfer around. You can do 1 million transactions for $1. But what we're using it for is to create a representation. So we have pesos in the bank, in the wallet, and then we give you tokens that you can then move around within the Stellar network and exchange it for other types of tokens, like might be US dollar tokens, etc. But in the end of the day, whoever has those PHP tokens come back to us and say, can you swap it for real money?
Right.
So the blockchain just allows you to do a lot faster, cross borders, no banks involved, etc. Other types of blockchains like Tron and EOS, they're fairly new in the last few years. And a lot of them are trying to do what Ethereum has, but faster and cheaper. But Ethereum is the big daddy of them all. Now, there are other types of blockchains like multi-chain Hyperledger Fabric, which are permission blockchains. They're more like traditional database that use the decentralized ledger technology, but you have control. So that's useful for companies that they don't want to use a public database, but they want to use their own, but still have the advantages of blockchain. Now, this happened in the early days of the internet. Used to have internet, extranet, and intranet, and we still have intranets for internal use of websites and the data that comes from it. Extranets are for control by some suppliers, some people outside into your data, and then public internets are more like Ethereum and Bitcoin. So that's where permission blockchains fit in this. Something else you might not have heard of is sidechains, where when you transfer data from Ethereum, one address to another, it's quite expensive. It can be might be up to $1, $2 sometimes, and it's also it can be a bit slower. Like it's not fast on Bitcoin. It's usually to confirm that the data has been transferred. You've got a transaction that's happened. It's about 10 minutes, and you might want multiple blocks to confirm that you've really got that. Sidechains allow something to happen in a second or less, where you can transfer the assets from Ethereum so they're faster to move around within a sidechain. So if you're playing a game with game items that are created on Ethereum, you don't want to wait 15 seconds for something to say, I've just won a sword, or I've just got something, or whatever. So you want that to happen faster. So sidechains are another form of blockchain that allows that. So the types of crypto assets, the main ones that we're looking at these days. First of all, you had cryptocurrencies, Bitcoin and anything else created. If you want to see on coinmarketcap.com, there are thousands of currencies that are traded, and you can see what the price is, where they're traded, what the value is from minute to minute, and so on. So cryptocurrencies go up and down in value a lot. So Bitcoin, used to go up maybe $1,000 in one day. 3 years ago, it was worth $20,000, and then a couple of months later, it was $3,000. So it's really, you can't really buy a cup of coffee based on that, because the cost of transferring the Bitcoin is expensive. Plus, you never know what the value is, so you don't know what to price your cup of coffee in. So the stable coins came about because you want something that is stable, and you can jump in and out of that from Bitcoin back to a currency that is valued at something you recognize, dollars or pesos or whatever, and then back into Bitcoin. So that was where it came out originally. So the first really well-used asset was Tether USDT, and that's backed by supposed to be backed by money in the bank, like billions of dollars in the bank, but no, they can't prove it. So for me personally, although USDT is used a lot, I don't trust it that much because I don't know, for definite whether there's money backing it or not. But sometimes it's just trust in the system, So it's more like fiat where you trust maybe it does exist as gold somewhere or whatever. So USDC was a coin put out by Coinbase. And I've done my own PHP and Euro tokens as well. So we're regulated. So anyone can create a token and say it's PHP. But am I going to trust you to, when I swap my tokens, are you going to have the PHP to pay me back? So we're governed by BSP, so we have to do that. Now, those are asset-backed stablecoins. You can have gold backing it, whatever you say. But you can have algorithm-based, which is like the DAI, which is pegged to the US dollar, one DAI, one US dollar. And it's algorithm-based by the network. And that, to me, it's not backed by any assets. It's backed by the technology. And that works really well. Some people, they prefer DAI to asset backs because what happens if, the central bank goes bust or the banking system holds your money goes bust. So DAI is a little bit more interesting. And from using stable coins and DAI and so on, then that introduces you to DeFi, which is decentralized finance, where you can earn more money on your assets. You can lend, you can borrow, all decentralized without any banks involved. That's for another subject.
Right. That is
for me. The interesting thing for me the last few years has been non-fungible tokens. The first time this was phrased and used was when CryptoKitties came out. So you could buy these cute little kitties, and then you could digital kitties, and then you can breed them with others, and then come up with a new breed and then sell it. So a lot of people like collecting things. So they want a unique thing they can breed and maybe have something else unique and then sell it on the open markets. So that's where the ERC 721 was another contract type that set the rules in place for those type of things. For me, I'm more interested in ERC 1155, which is a more efficient way of creating any type of asset, non-fungible or fungible. So you could imagine in a game, you can have 10 swords. They're all exactly the same, but you can't divide them any further than one. So non-fungible means you can only have one. You can't have half of one, like having a ticket to a show. You can have one ticket, but you can't have half a ticket. It's like your ID is non-fungible. You can't divide yourself.
I also don't know, Mark. Like, could you explain what ERC stands for, and like what are there like numbers for each, right?
Again, the Ethereum. Okay, just gonna do it. You can look it up faster than I probably can. But Ethereum. I should know.
Request for comment. So it's like a version.
Request for comment, yeah. So that is a group of people, and anyone can contribute to that, commenting on it and saying we should allow this, we should allow that, and then at the end of the day, then those rules are accepted as how a contract should be created, and it gives some like a standard for people creating new contracts. Say, we'll just do it like that and call it ERC20, and everyone knows that it meets those standards. Right. And so there's quite a lot of standards for different types of tokens that are created. One that I'm working on is EIP. It's ERC 884. So that's for how shares should be managed, and that's leading on to the next thing. But on non-fungible tokens, probably you all play games and you own things in the game, but they only exist inside the game. You can't take that asset, your swords, your clothing or whatever, to another game. So the idea is like in Ready Player One, if you've all seen the movie, those assets can be sold on the open market to someone else, but you own them, not the game. And so that's what it's growing more and more. You get blockchain-based games where you own the asset and you can trade it. But the same technology can be used for business. So you can imagine a real estate token that represents your property. And I'll show you an example where the data can actually be managed by the government department, but you still own the token. So the paper certificate that you normally get for owning a property, you can now have in digital form and own it and transfer around. So the government doesn't have to deal with that. For us to be able to do everything decentralized, the government departments, they like control. So it's unlikely to happen very quickly. So you want something that gives the benefits on both sides. So I see the future of non-fungible tokens being used a lot more in business, and again, a lot more in games, because people want to be able to, to once they've worked for 3 months to get some value, they want to be able to sell it or do something with it, and they put all that time. And you'll know that in China they have gaming farms where they build up value for an account over 3-6 months, and then they sell the account with all everything they've learned, and that's the only way they can do it right now. It's illegal, but that happens, right? So
sorry, go.
It is legal. Yeah, illegal, but
I see these happening on like game skins and like games we play, right?
Right.
Like, skins that you can just sell for once you're done with it, or you don't want it, you can just purchase it.
They might do it within the game, but you very rarely have assets that can be used in multiple games from different manufacturers, different developers. So anyway, that's, for me, that non-fungible token usage is quite interesting, and that's what I'm doing a lot more on. And tokenized securities are maybe a mixture of both because one security, one share shouldn't be able to be divided. So it's a form of non-fungible token, but they're better done as an ERC20, where you can actually, or other forms where you can, send them around, transfer them around. So rather than having the paper certificate, you have it on blockchain. But this is more like, company shares are securities. Commodities can be securities if they're developed, if they're changed into something else. Anything that promises you a dividend or return is a security, and they need to be regulated by the SEC. So if you think you can create something and then start selling it to your friends, think again, because you're probably, especially in the US, they're probably jail for it. Over here, they just send you a cease and desist letter. Yeah. But tokenized securities are the future, where it just makes sense using the blockchain to be able to transfer and exchange securities. But there's a little bit more involved in, KYC of knowing your customer, who that customer is, who owns it. Whereas Bitcoin, anyone can own it and no one knows who it is. So that's where, and I'd like to, it's happening in the US a little bit, but we've got some way to go before we can actually see completely tokenized securities running on blockchains. So that's a brief background of blockchains and the kind of assets are created on it. The future for me is, if you take cryptocurrencies and money, in terms of like, you own what you bought, what you've obtained. Instead of the bank holding it, you own it. But with that comes responsibility. If you own it, then you also own the private key that controls that. If you lose the private key, you've lost your asset. So if you trust the bank to do it better than you, maybe you trust someone like PDAX to hold it, or someone like a bank to hold your money. That's what banks are for right now.
Right.
But as time goes on and people understand that they control what they have, and there are other things like with stablecoins, we can reissue the money if you've lost it. With Bitcoin, there's no way you can do it. So there's levels of access and control.
So like if someone can claim that they lost a certain stablecoin and you replace it, won't it like just add?
No, because we know each address that's on the chain. We know who it is, and what we do is we freeze that and burn the money off that, and then we reissue it onto another address. So there's a lot more control with stablecoins. Not all stablecoins are like that. I've sent DAI to the wrong address. In fact, I've sent it to the contract address by accident, like $500 by accident. I've lost that. I asked them, I said, can you, because it's gone to the central fund.
Right.
And because it's not issued by a central authority, no one can give it back. But if you've got a central authority that's issuing the stablecoin, they control it more. So we can do that. Yeah. So you get the advantages of blockchain with some of the advantages of, I've lost my private key. So we reissue it to something else. And we know who you are, so we can do that.
Understood. That is really exciting. Okay.
Yeah. Someone's got, will the role of traditional financial system decline due to development of cryptocurrencies? No, I think that it will. Cryptocurrencies are a very small part of the financial system right now, but the development of stablecoins and sovereign currencies as blockchain-based cryptocurrencies, well, they're using the crypto system, but they're basically stablecoins, like the one in. Let's see, in China, the central bank currency that they've issued that runs on blockchain, they have a bit more control over it. But it doesn't replace the financial system. It's just augmenting it. It just allows you to do things a lot faster, a lot easier, and so on. It's very difficult to send cash from one person to another in Davao, but you can do it over a blockchain, or whether you're sending it via Palawan Express. It's digital money, but blockchain just allows you to do it a lot faster, a lot easier. So it won't replace it. The financial system will absorb the new technology. And if the banks don't, then they're just like the printing businesses pre-internet. They go bust. So if they don't take advantage of new technologies, yeah, obviously they're going to go bust, because other companies will, other banks will. They become more efficient, cheaper, and so on.
Just to add to what you said, like for those who don't know, like China has rolled out its own digital currency as well. So it's
not
built on blockchain.
The yuan digital currency, right?
Yuan digital currency. So they really are. China at least is really adopting blockchain into their like governance as well. So,
and since China's doing it, then it's making other countries around the world, and the US especially, look at doing it as well. For me, here the BSP, the central bank, let companies like us do it. But my personal opinion is that the central bank should issue it, and they control it. But we're not at that stage yet. They're letting us do it first and see how it goes. But probably there's more trust in the central bank than in TagCash, but that's just a marketing perspective.
Right.
But yeah, and this is the future of cryptocurrency. Is cryptocurrencies will always exist. Yeah, it's more like a speculative gambling thing, and depending on the value proposition of the cryptocurrency, then it might be worth more or less at any certain time. Bitcoin is the big granddaddy of it, and that's the digital gold of the future. I don't think that's going to change for a while. There's too many people involved with it, too many institutions now getting involved with Bitcoin. So we used to think that all the others, like thousands of other cryptocurrencies, would dilute the system, but no, Bitcoin is still the biggest, and that's where your wealth can be in Bitcoin, and it will. I'm not going to give financial advice, but it'll probably grow in the future. We just don't know when. But it can go up and down, just like gold does, right? Right. But for me, I treat Bitcoin not as a currency, but as a digital gold store of value. And it's better if I put money in the bank. How do I know the bank's not going to go bust, like Lehman Brothers and so on? So at least I have some confidence in Bitcoin. Right. I have since it started since I got in 2012. I put a lot of money into it. So hopefully it goes up in value. It's good for me.
Definitely. Let's go to the next question by Chad. Is it likely for cryptocurrencies to replace the existence of fiat currencies, or is it much more likely for them to coexist alongside them?
They already coexist alongside them. And then fiat, like sovereign currencies, will not be replaced anytime soon. So they'll probably more likely go into, they use the blockchain to exist like cryptocurrency, but stable. They'll coexist. Just like rewards don't replace money. Rewards they coexist at the same time as money. I like that question. Do you think Bitcoin is like Friendster before Facebook? Well, only in that Bitcoin has 1,000 other, 10,000 other clones. So no, it's a little bit different. And it's not one company that promotes it. Bitcoin is a community. So it's not like one, because Facebook did well because it pushed the features, and Friendster did badly because it didn't. So it's not one company that that pushes Bitcoin. People ask me, is Bitcoin a company? Is it an investment thing? Blah, blah. No, it's a community. And that's what makes it grow. And that's the biggest one right now. And who knows, it might be replaced by another community. I mean, Ethereum could replace Bitcoin. Whatever gets the most usage and the most trust will replace Bitcoin, but not for now.
And to transition to that question by Nicole, she asked, what would it take for any of the Bitcoin duplicate crypto projects to successfully replace Bitcoin?
For a bigger community to take it over, or for someone to hack the Bitcoin blockchain. If they hack the Bitcoin blockchain, then they could hack any blockchain. So far, after 10 years, no one's been able to hack Bitcoin, or so there's a lot of trust in Bitcoin. There's a lot of companies and individuals like me that have got a lot of money invested in Bitcoin. So it's in our best interest to keep it going. So Bitcoin maximalists will push Bitcoin above everything else. And that's part of the community movement. and you need a bigger community movement to to say that Bitcoin's not worth as much, something else. And you've seen that with the forking of, and if you want to explain forking, that's fine. But forking a Bitcoin into Bitcoin SV, Bitcoin Cash, Bitcoin Gold, that they had good ideas, but the community wasn't as big as Bitcoin, and they didn't replace it. So it's been tried. Facebook clones equivalent, they've been tried, and they still exist, but they're not as big as Bitcoin.
Just to try to take a crack in explaining what a fork is. It's like when they diverge, when one project diverges into two versions because they don't agree on some philosophies. So they end up like operating independently because they have different.
If you imagine, if you explain it like a chain of blocks, and then you can have an unintentional fork where someone decides to go off in a different direction, but your money, your private keys, can exist in both chains at the same time. So that can happen by accident. And then usually in Bitcoin, the longest chain is the one that everyone follows, and then the short one dies out and no one uses that. It's rare, but it can happen. The smaller blockchains, it can happen more. So you get an unintentional fork. But you can have a permanent fork, like you do it on purpose, and you say, right, we're going to go off on this fork, and everyone that supports that, we're going to go off and we're going to call it Bitcoin Cash or something else. And for me, when I first I heard about the Bitcoin fork, so 2016, I think it was the first one. I can't remember exactly. And I was looking at it going, well, I'm going to stick with Bitcoin. I'm not going to go with Bitcoin Cash. It took me 2 weeks to realize, oh, I've got just as much. I got value in the other chain. So I said, oh, wow, all my Bitcoin is now worth lots in this other chain. So I sold all that, and then I made quite a bit of money just saying, selling because I wasn't interested in Bitcoin Gold or the others. I just sold it, whatever I sold it for. It was free money.
Right.
And the only reason I learned about it is because in America, the IRS started saying, we need to tax people that are getting free money from these forks. I thought, wait a minute, I'm going to make money? Okay. So I was a bit stupid. I didn't look at it properly. But, I made some money out of it. And then the forking, and it kind of died down. Like 10,000 forks of Bitcoin. So that's forks. What else? Questions here?
Hi, Mark. How can you convince that the public that Bitcoin is not a scam? So this is obviously like one of the, like when we're learning about it, one of the top assumptions is that we think that
scams exist because, first of all, you got to understand the technology. So you go, okay, that I understand the tech a little bit, and then you say, because you'll hear scams happening, and Bitcoin is used in a scam because it's an easy way of transferring money around or transferring value. It's so easy, and you can't get it back. You can't complain to anyone. That's why they use it in scams. But Bitcoin itself is not a scam, and the only way to convince people is say, buy 100 pesos worth from a friend or from PDAX. You say, buy a little bit and then transfer it around, and you've wasted 100 pesos to learn it's not a scam. But really, it's education. Your friend's using it, and he's going to explain it to you. You watch this, and I explain to you how it works and why it's being used. So we've got somewhere to go in the Philippines to explain what the scams are and what they're not. But common sense is key in this. What's the one above it? One thing that no other cryptocurrency can replicate is that they're all somewhat centralized. No, not all cryptocurrencies are centralized. Like Ethereum has got
like different
pushing it, but he's not the, if he disappears, it would carry on without him. Yeah. So you look at, if you've got something that's based on assets, then you have to think a little bit more. If it's running as a technology, like TagCoin, I left TagCoin, or rather I didn't support it like 4 or 5 years ago, but it still goes. It's still running as a community. So it's a community that support the growth. It doesn't really matter about the founder, unless there's assets that give that value to the currency. But usually cryptocurrencies don't exist like that. They usually exist following the same clones of Bitcoin and so on. Tokens that are created using something like Ethereum or Tron or whatever, that's where you have to say, what's it backed by? Who's in charge of it? Are they trustworthy and so on? So what's the next one? Do you think that having a centralized blockchain could make people distrust the technology more? Well, a centralized blockchain, you already, those two things don't really go together. Permission blockchain, that will actually let companies get into the blockchain business with a little bit of trust, rather than go straight into a public blockchain where they don't trust it. So I think any kind of DLT, distributed ledger technology, will get people into it, just in the way that extranets and intranets got people into using public internets to log in and do stuff via the internet. So I don't think they will make it distrust it more. No. You look at the team behind centralized chains or whatever they're doing, and you trust them. The technology is good. It's the people behind them. That's what you look at. Why would people trust Bitcoin if the creator is anonymous? If he was known, or the team was known, they might get a little bit too much flack from people that don't like what's going on with Bitcoin. So it's probably a good idea that they don't exist. And it's a little bit of mystique behind it. It's makes it more interesting for me. Do I believe XRP is a security? Yes, because it's run by a centralized company that control the use of it and the burning of it and so on. And XRP is Ripple, and I like Stellar better because Stellar is a better version of Ripple, and it was created as a non-profit. So, yeah, but I think XRP is security. But that's up to the regulators to decide. Go on. What's the biggest roadblock? The biggest roadblock is, let's see.
I mean, like, maybe it's more of like, there's so much resources out there for someone who just wants to get into learning about what blockchains are.
How did you first learn about email? You found out online, you learn, you say it's useful to me. I want to learn so I can use it. How do I build a website to promote my business? You get someone else to do it, or at least you know what it does. And so if you see something that I'm going to make money out of this, I should learn about it. I shouldn't just believe what someone tell me. I should learn more about it. But it really comes from a base of wanting to make something better in your life, whether it's your business or personal life, transferring value, whatever. So the roadblock is not having enough use cases for me. Once you get lots of use cases, then you go, okay, I've got to do this because my friends are doing it, my competitors are doing it, so I've got to do it. So that's where you start learning. You don't know how email works. You just know it works, and this is how I use it. So probably a roadblock is simpler technology being produced. Things like using MetaMask inside the browser makes it very easy. So the roadblocks are software that makes things easy and need to do something. What else we got?
For this, where are you getting your? Hi Reagan. We also, for those who don't know, we also stream on YouTube. We see your comments, so just send your comments, even if it's on YouTube. We'll be able to see it. Thanks.
Someone's got, when it comes to hard forks with decentralization in picture, how do you know which fork is the official one? If it's a hard fork, then the official chain will be shown. But how do you know which one will be? The wallets will actually have usually a checkpoint to say we'll follow this path, not this one. And then if it's unintentional, then the software itself would decide which one's the longest one to go with, and it goes in that direction. So the technology itself handles the forks. If you have an intentional fork, then again the software will have something put in there to say this is where we're going. Let's see next now.
Looking for the future, is there any is it possible that the system like PDAX, where you will put your assets, will declare?
Absolutely. And this has happened in the past, and I've lost money with Cryptsy. I had a Bitcoin and TagCoin in Cryptsy, and they went bust, and the guy disappeared off to China somewhere. And his last name was the same as mine. So people saying, is that your brother? No, some guy. So in the past, you probably heard maybe Mt. Gox is the biggest one early days of Bitcoin. That guy disappeared, and the whole thing went bust. So there's always a possibility, but less and less now. The exchanges are going, they're regulated. So they have to put things in place to kind of stop that, but it still can happen. You never know. So the best system of all is a completely decentralized system where you do decentralized trading as well, where you're working peer-to-peer and there's no middleman. For me, the future is decentralization of the exchanges as well. So PDAX would argue that and say, no, we're here to make it easier to trade. for me, the future is decentralized trading and decentralized transfer of value. In the same way that, the internet was supposed to be totally decentralized, but then companies like Amazon and Facebook, they kind of centralized all of that into one place. And we still will need to move the internet to truly decentralized model. Who knows? So that's happening now with Binance, PDAX, and other. It's happening the same way. But we'll see how that goes.
Yeah.
Do you think transitioning to proof of stake?
Just that-
Bitcoin is not going to move to proof of stake.
Okay.
Ethereum is, but Bitcoin's not. So the thing is, Bitcoin blockchain doesn't seem. I mean, scaling problems. We don't use it for transactional processing. We're doing millions of transactions a second or whatever. It's a store of value. So no, I don't think it was. Yeah, and even if they went to proof of stake, it might solve the problems. But Bitcoin is not moving to proof of stake. Ethereum is, and it might solve the problems. Hopefully, it does. How long is your KYC verification?
3 days. 3 days. Thanks for asking. 3 days. Okay.
3 days. TagCash takes about 15 minutes. We'll have to show you how to improve it.
Right.
Ours is, it depends. So let's see.
What can you say about most people who buy Bitcoin to gain more monetary value, just waiting for the Bitcoin price to go up, rather than buying it for real-world use case?
You don't buy Bitcoin for real-world use case. You buy Bitcoin if you have a need to transfer value, a lot of value across borders. You might want to do it that way. Most people buy it, sit on it, and hope it goes up. Probably half the holders of Bitcoin are sitting on it, waiting for it to go up. But for me, I spend it as I need it. So if I need to, buy a house, I'll use Bitcoin that I've got stashed there.
Nice.
So yeah, I mean, you treat it as a store of value, and when you need it, use it. If you don't need it, leave it. That's it. Some people trade on the fine margins. Right now, it's going up between 9,000 and 9,300, and they might buy and sell in between that trade. So that's day trading or trading on Bitcoin, and you've really got to know what you're doing to do that. Otherwise, you might lose money, just like shares. What else we got?
Means to decentralize information. Don't you think it's ironic how companies are centralizing this information?
Yes, but that's up to you. If you're happy with a company handling your central information like Facebook does, then deal with Facebook. Otherwise, it's up to you. If you don't want your information centralized, don't work with a centralized company like Facebook. And then use DuckDuckGo instead of Google for doing your searches, so they don't trace everything you do and then show you adverts based on what you've searched for, which can be embarrassing sometimes.
Moving on. Agree. I mean, we gotta bring adoption though, which is why there are companies that try to bring adoption by forming together a central authority. Well, eventually, right? I mean,
the moves on centralized information, the key thing right at the beginning is your personal identification, your personal identity. So the ideal thing was you have your identity controlled by your own private key, and you decide what information can be used when you log in with that. The same with your medical records, you should have that. And there are lots of people working on those solutions to let you control your own information, and what you sell. You should control your information and how much it's worth. And what your attention is worth, and so on. So companies like Brave Browser, they pay you for your attention. So there's a lot of movement in that direction. There was interesting. The hype on Forsage. It's a complete pyramid scheme, and we've been discussing this the last couple of weeks.
Yes.
It's interesting that it's a complete pyramid scheme, and you'll only make money if you get your friends to come in. But it's illegal for you to get your friends in. You're breaking the law by promoting it to your friends. So you can get prosecuted by the SEC for that. Just in case anyone knew that. So it's an investment scam. And no, you're trying to scam your friends to come in there because that's the only way you're going to make money. But it's interesting that it's a pyramid scheme that's completely transparent on the blockchain. So it's the first time, or there's been some others, but it's interesting that these pyramid scams are now going on the blockchain, and they're there in the contract for you to see. So it's quite interesting from that perspective, but use your common sense. If they're not creating any value, if no one's using it and they're just using it to try and get their friends on so they can make some money, obviously it's a scam. But whether the only people that benefit really are the people that created it, and I'm not quite sure how they make money, but the people that make money are the ones that you get your friends into it, and it's a complete scam. But it's happened before in the Philippines, and it doesn't stop people trying. People like free money and easy, quick money, but
For those curious, our own SEC just denounced it as a Ponzi scheme. So
right. So Ethereum is not the scam. It's what they've done with the blockchain. The same as using Bitcoin to pay for a scam that doesn't make Bitcoin a scam. It's just the technology they've used.
And I mean, like last night, there was also a Twitter was breached to use like the verified accounts, like make these verified accounts tweet, they want these, like, imagine Elon Musk asking his followers for Bitcoin. So actually, it's not Bitcoin as a scam. It's more like it was being used for.
Right, absolutely. So the question had simple answer. Do you recommend storing? Let me go up a bit. I can't read it. Where are we? Do you recommend? Oh no, he's got in the long term. Do you see cryptocurrency being used more as a medium exchange or for trading investing? Trading investing. That's opposed to blockchain for business, and you can use more stable coins as a medium exchange. But cryptocurrencies, that's definitely trading and investing, because the volatility doesn't mean you never know what the value is from day to day, so you can't price things in that. But however, you can have, say, a cryptocurrency wallet with money in it, with like Bitcoin in it, and then use an ATM card, a Visa card that actually deducts at whatever the rate is, and when you're paying for something with a Visa card. So that already exists, and that will probably grow more. And then when the banks recognize your Bitcoin as value, you can borrow against it, which they don't do right now. But there's ways of doing it with DeFi. So do you recommend storing majority of coins to cold hardware wallet? Yes. Don't store it in an exchange if you're not going to be trading it. Don't store it in an exchange. Don't put it in CoinsBH or anything else. You should be holding it as a cold wallet in paper format, or if there's a lot in multi-sig paper wallets or whatever. But don't put it in exchange, because you never know if exchange is going to exist. Sorry, PDAX, but it's just common sense.
Or like hardware wallets like Ledger or Trezor that you can purchase, or even like free paper wallets that you can go. What would you recommend for paper wallets, Mark?
That wallet generator, you can download the software to your computer if you want, and then run it if you don't trust the system, or you can just randomly create addresses. There's a lot of information online. Just search for paper wallet generators, or how do I store my Bitcoin, and so on. There's just so much out there. This is for you. Any plans that PDAX move to a mobile app platform?
Yes, we are in the works, definitely. Please stay tuned.
And me too as well. So yeah.
But
I might be working with PDAX to put a module within TagCash, so it's easy to swap your e-money for through their exchange. So what do I think of Libra? Basically, that's changing into a stable coin system. So it's the same system as stable coins. They're going to issue US dollars backed by US dollars and so on. So Libra coin started with good intentions, but really there's too much pushback from the regulators to make it happen. What's your pick an ICO? I've never invested in an ICO. I don't trust them enough. For
those who don't know what an ICO is, it's called an initial coin offering. It's basically like an IPO, but for crypto, in a crypto sense.
And you look at the majority of ICOs out there have failed or are not going anywhere. So they pump up and then they drop down. So if you want to make money on the hype and then sell it at the right time, then but I don't do that. I was asked to do my own ICO in 2017, just before the Chinese stopped trading in China, and then they clamped down on ICOs, because I had a whole community of TagCoin users saying, can you do an ICO for us? And we'll give you $20 million worth of Ethereum to do it. And so I said, okay, that sounds good to me. But then the whole market came crashing down in China, and then the whole project fizzled. But ICOs, no, I've never, I don't. The basis should be, look at the team behind it, look at the idea. Do you understand it? Is it going to be a benefit to you? Then you might want to invest. If you're just doing on hype and what your friends are doing, then you're going to lose money, usually.
I think the scary thing about Aliana says, I think the scary thing about decentralization for ordinary people is that you don't know who to go to after if things go wrong. What can you say
Um,
about
in the Philippines, yeah, in the West, people don't want to go anywhere because they don't trust the people that they can go to. They'd rather have trust in the technology and their own skills. So we have a long way to go in the Philippines before we get everything going decentralized, because people are used to going to someone to complain about something, or where's my money, and so on. Um, it can be scary if you don't understand the technology. If you understand it, like email, in fact, Facebook is very scary, but it doesn't stop people posting all their pictures on it. The amount of data goes up on Facebook about someone is very scary to me, but people are so used to doing it now. 20 years ago, it would have been impossible for me to imagine this happening, but it's happened. So the same thing with decentralized money. I have my wallet, I have my cash in a wallet. I could lose it. Someone could mug me. But what's the difference between that and saying I have my money in a safe in my crypto key, and I've got it in multiple keys in different places, just like hiding your money in a under the mattress.
that?
And now it has more uses for me. It might build in value, or it might, I can use it to loan against. I can do more with it. So yeah, any new technology is scary to begin with until everyone starts using it and making use of it. Next.
Wouldn't it be difficult to use Bitcoin as a means of transferring assets from one person to another when it could be too volatile? How would you fix this issue since it would
If I say I'm going to give you $1 million of Bitcoin at that time, then I'm going to give you $1 million. You can immediately sell it, or you can decide to hang on to it. But you say what the value is at the time, or I say I'm going to buy a house for $1 million. I'm going to sell that much Bitcoin. Now I've got $1 million. But if you're transferring the value, it'd be nice if the person that's selling me the house would accept Bitcoin. A lot of them don't. But I'll accept Bitcoin for I've got a boat, so I might accept Bitcoin. Well, I would accept Bitcoin in exchange for that. So you don't need to use a bank at all. But at the time, the asset is worth this much, Bitcoin is worth this much, transfer at that time. Then I can sell it immediately.
Definitely.
So, and that's the same for any assets. It doesn't work. It doesn't go up hundreds or thousands. Well, it can do, but you're talking about you can buy and sell it within 5 minutes or less if you want to. So the volatility is not there and the speed of exchange it can happen in a few seconds. So I am faced with that when I'm moving money from Europe to Philippines and back again to euros. So I have to think about the currency can change in value, and if I'm working on a mid-market rate, that might change a few percentage points. And if you're working a few $1 million a day and you're transferring using Bitcoin, you've got to make it happen in a few seconds. Buy and sell it. We're all within the space of a few seconds.
Or you could use stablecoins, right? I mean,
yes, you can. Yeah, and that's the purpose of using Stellar blockchain, is to have the assets moved around on blockchain, but stable. That's the whole point of the idea: stable coins.
are all crypto mining and HYIP website scams? My friend is with miningup.com, and now website is now not reachable. Oh,
where's that one? Are all crypto mining scams? HYIP are usually scams. If someone says, yeah, I would say 99.9% of all of those are scams. But I used a website the other day where I used my I wasn't giving money to them. If you get asked to give money, it's going to be a scam. And even if it's not, don't do it, because chances are you don't know what you're doing and you're going to lose money. You can mine with I tried mining through a website that you go through the website and you mine through your graphics card, but the power, it worked out 1.84 pesos to generate per hour, and I was making $1, so $1.30 I was making. It was costing me a $1.80 in power. So, yeah, it's pointless. So, but to answer that question, they're all scams. Don't do it.
Right. Why create coins similar to USDT, such as USDC or PAX, whose sole purpose is to be sort of like a reflection of the dollar? Isn't the USDT enough?
Well, do you use dollars here every day? No, we use pesos. So you want a peso equivalent here because you don't use US dollars. Now, a country like Venezuela or Zimbabwe, they're going to use US dollars because they're easily accessible, or they can get hold of them and use them, and they have some value. But the US dollar is not going to have value much longer. Not with the trillions of dollars they're printing out of thin air. What's backing it? The army. That's about it. So I think the US dollar is going to go down in value as well. It's going down against value against the peso. So if you get USDT, it's going to be worth less against the peso right now. That might change in the future. So no, US dollars, you can't say US dollars. It could be the yuan in the future. Chinese money could run the world. It's going to be interesting to find out. What are my thoughts about Bitcoin SV? Well, you have to look at the owners behind it. Calvin Ayers, the fact it's run from the Caribbean, offshore islands. You have to look at his background in gambling and stuff like that. So personally, I don't trust the guy. So I don't trust Bitcoin SV.
So a lot of these things, Mark really does do his own research. So I would advise everyone to also do their own research, because these things.
Bitcoin SV tried to join the FinTech Association, send us Bitcoin, and we send it back. We send it back to them and say, we don't want you as a member.
So because Bitcoin is a fork of Bitcoin, yeah.
Yes, yeah. So I said, would you be able to sell your condo for Bitcoin?
I remember that, yeah.
Bitcoin's for it, yeah. But no, I'm taking it off the market because I want to keep it now. I'm buying a place in Cyprus. I'm moving to Cyprus for a few months of the year. And I'd like to buy the house I want over there in Bitcoins, but no one wants to take them yet. But there are plenty of places in the US, maybe not here, that will take my Bitcoins willingly in exchange for a Ferrari. They'll sell me a Ferrari for Bitcoin. There's plenty of showrooms that will do that,
Adoption, guys. Adoption.
And here I went to buy a car, and I said, "Do you take Bitcoin?" He said, "No." What's Bitcoin? But the thing is, they could have got an instant sale. I don't have to write check. I got the wallet on me. Bang, I can pay them instantly, and they've made a sale. And I can't get my money back afterwards. So would it be?
Does PDAX have a plan in the future to add more crypto? If yes, do you have some kind of voting system for users to vote for their favorite asset to be listed? So yes, definitely there's a plan. We can't. We can't disclose much, right? But as of now, yes, we can. So what we can say or share is there's definitely a plan to add more coins to the listing. We just can't give a promise a definite date or what it is. Right.
And there's an issue with some exchanges taking in tokens that are deemed as securities. Then PDAX has an issue. Also, are you going to be charging for adding coins to your exchange?
I will. I have no comment yet.
Because a lot of exchanges do charge, something up to $30,000-$50,000 to add something. And I don't like that. That's like money for hire. Nah, don't like it. This is one for you. How much is your trading fee? What are your trading fees?
Hold on. It's our market fee is if I'm not mistaken, it's around 50 bits.
Half a percent.
0.05%.
Yeah, 0.5%. I'm gonna get into your business. 0.5%. Wow, I'm not gonna say anything about that, but that's a high rate. But not in the Philippines, not really. Because you are the only one in the Philippines.
Yeah. 0.5%, yeah.
Okay. Coins doesn't operate a live.
It's lower. It's lower for limit trades. It's 0.4%, so 40 bips.
The more you trade, then the lower it gets, right?
Yeah. How do you think? We can have these as our final two questions. Do you think cryptocurrencies can move forward in the future with regards to mass adoption and government regulations when a lot of coins are decentralized in nature?
The government departments are not going to adopt cryptocurrencies. They're going to adopt blockchain technology, and they already are looking at it, or we're working with them to try and say, this is how blockchain technology can work for you. But that's got nothing to do with cryptocurrencies. Cryptocurrencies won't be used by government departments because they got no control. There's the volatile. There's no point. They might use a stable currency, but they won't even use it. They won't even think of it as a stable coin. They'll just see it as a wallet amount, just like digital money in coins or Gcash, PayMaya, TagCash. That's digital money still. So going onto a blockchain just means there's more use of it, and you can do more with it. but there won't be business use cases will not be using cryptocurrencies. They'll be using blockchain technology. There is a difference.
Definitely. And final question from Ollie. A lot of traders offering $1,000 if you invest $50. Is this true in crypto trading, or are these scams as well?
Anything that looks too good to be true is a scam. Because that's the bottom line. So if someone's giving you $1,000, you can take that out straight away. So if they do that, there's probably conditions in there that you get $1,000 worth of tokens that you can spend on something else. But if it's something where you can put it in and take it out straight away, that's a scam, because you're not going to get the money back. It's like it's almost like a forward fee scam that Nigerians do a lot. Give me $5 and I'll give you $100 back, guaranteed. But they run off with your $50, So
Definitely.
BAT, that's a lot of question. BAT is depends how well the Brave browser does. Of course, it'll go up if it's used more, but I'm not going to advise on that.
So I think that's all the time we have for questions. Thanks, Mark, for coming over. You to the audience, and thank you, Mark, first and foremost, for sharing your wisdom and knowledge for us now. And we're looking forward to seeing you in the future. Maybe we can get on a future webinar to talk about a different topic now. For everyone who's still here, hello, thank you again for watching and reaching till the end of this webinar. If you see the scrolling ticker at the bottom, you can actually sign up with us, sign up with an account on PDAX.ph. And if you verify your account, you get 50 pesos worth of free Bitcoin. So, if you wanted to learn more and get a chance to educate yourself, that's what Mark said. The best way to learn is also to expose yourself to just trying it out a bit.
Yeah, but no scam. I just seen someone post something that's obviously a scam.
Yeah. No, I'm deleting this comment. There you go.
So if anyone wants to get hold of me, they can talk to me on Telegram. I'm at Mark Vernon, or on Facebook and fb.com/Mark Vernon. So they can chat to me online. Just if you're going to chat to me, make sensible questions.
Definitely.
My time. I'll talk about it.
Don't ask for money from it. Don't ask for Bitcoin from Mark.
Okay. And don't ask me to invest in your scam.
Yeah.
All right. Thanks.
All right. Thanks, Mark. Thanks, everyone. We're ending this broadcast. Bye-bye.